So we live in turbulent times, of that there can be absolutely no doubt. The big picture today is characterized by two simultaneous global and wholly systemic crises. These are, of course, climate change and the COVID pandemic. Into that heady mix, we can now also add, of course, war in Europe and the associated higher oil prices. This has taken the fizz out of the global recovery, and we think that we will go from the 6% global GDP growth recorded last year to 3.4% this year. It is still in line with average global GDP growth, but clearly not as good as we had hoped for before these developments this year. And the higher oil prices also, of course, act as a brake on global GDP growth, certainly in the oil importing countries. And I would just like to stress that higher oil prices do not necessarily spell recession. In the red bars, you see the period of 2011-2014, which was a period also characterized by high oil prices, around $100 a barrel or above, and at the same time, we had global GDP growth in the vicinity of 3.5%, and we had profitable airlines. So there's no necessity of recession, and indeed, we would still say that although the risks of a recession are increasing, they're still, on balance, low. The main legacy of the COVID-19 pandemic, is, of course, the higher debt levels. Now, the world tends to accumulate debt year on year, as you can clearly see in this chart, but the increase from this crisis is greater than most, and this is, of course, we can hardly characterize this as being sustainable. But it could, however, at least in some sense, be affordable. So higher oil prices, and actually higher prices pretty much across the board, means that it's a kind of subsidy of the debt holders. At the same time, of course, it's a tax on savings. But looking at the debt side, we would take, of course, the nominal interest rate. So, for example, in the US, the 30-year fixed mortgage rate is today 5.6%. We subtract the rate of inflation. In the US, the May inflation figure was 8.6%, and we arrive at a negative 3%. This is a subsidy of the debt we hold. We borrow 100 and we repay 97. So that is some good news, at least in terms of how we might be able to manage our debt burdens. But when we have systemic crises, we also ideally would like to be able to furnish a systemic solution. But humanity is ill-equipped to think systemically. We tend to think about one thing at a time, and we don't necessarily order these things in any kind of logical order of importance. Here you see, for instance, the results of Google searches. In blue, the attention to the COVID crisis. In gray, the momentary attention to the war. In green, all of a sudden a spike concerning climate change. I honestly don't know why in April, May this year. And then, lo and behold, Johnny Depp and Amber Heard. So clearly, we are ill-equipped to provide the systemic, holistic solutions to the systemic crises we face. I fear that this is going to be the biggest problem going forward, and that it's something that spells further fragmentation in regulation and not necessarily the ideal backdrop for creating a global commercial aviation sector and a level playing field. Moving into our industry, this was indeed the greatest shock to our industry in history. We can see the sharp drop caused by the COVID crisis, and we can see how all the previous crises just pale in comparison, mere blips now in our history, given the seismic shock of what we have experienced since 2020. And although we are definitely recovering, and quite strongly so, we nevertheless, because of the macroeconomic backdrop just described, do not think that we will rapidly come back to our pre-pandemic forecasts. So in this scenario, we have lost about 2 years of activity almost, and the blue line is our current forecast compared to the red line, the previous pre-pandemic forecasts. We think that it's quite likely that even in 2040, we will remain below the more optimistic outlook we had before the pandemic. So the industry's recovery is definitely underway. It is driven by two very important things. First of all, the travel restrictions or lack thereof, combined with this strong urge that people have to travel again. Every time travel restrictions are eased, people come and buy more tickets and want to travel again. So therefore, we see how cargo was always protected by their lesser exposure to travel restrictions. Domestic RPKs today are impacted negatively primarily by restrictions in China. International RPK, you can see, are accelerating, the blue line, thanks to other countries lifting their travel restrictions. And this leaves us with a global situation where we think that we will be 43.4%, we were 43.4% below 2019 levels in April. So another interesting development that has favored cargo is the relative price of air cargo compared to maritime cargo. I think this is a uniquely rare experience, that while all cargo yields have risen sharply, they rose more sharply in the maritime sector, and this created a very significant comparative advantage for air cargo. Of course, impossible to know if it will last, but certainly this was a very favorable factor in our recovery. Now, we again think that our activity going forward is very much driven primarily by restrictions or no restrictions. We are definitely seeing how people want to travel, and the result of this is that we think that we will be back to 2019 levels in 2024. Of course, there's regional variation around this number, this year rather. So the US would probably be at 2019 levels already next year, and China, for instance, probably a year later than the majority of the industry. And of course, with more passenger traffic, we will also have more belly capacity, and this will put some downward pressure on cargo yields, but this is from a very high level. Indeed, cargo growth is also flattening according to our recent developments, but you can see the same picture here, that it's flattening but maintaining still a very high level. So the total load factor has, of course, improved with these developments, and we think that this trend will continue. And you can see how the difference between the current load factor and the break-even load factor is diminishing. So this is a clear indication, of course, of increased financial health in our industry. And if we look at this chart, we can be quite buoyed and dare to think that next year we could actually be profitable again, unless we are thrown another curveball, and barring unexpected events, that would indeed be a possibility to be profitable as of next year. Here you see the depth of the loss that we took in 2020. And given that seismic shock, I must say, for one, that of course it's regrettable that we're still in the red this year, but what a phenomenal improvement, and what a rapid improvement. And I think that really this is a testimony to the resilience of our industry and to the agility of everybody in our industry, and I think that this is a phenomenal result, even if it's still in the red. Around these numbers too, we have regional divergence. So North America is likely to be profitable already this year, followed in order then by Europe and then the Middle East, with Asia Pacific, Latin America, and Africa being the three more lagging regions in terms of financial health. And costs are, of course, the thing that will matter the most, has over these past years, and will likely also in the future. Fuel costs are a quarter of airlines' expenditure, and they are likely to remain high also into next year. There's an acute lack of refinery capacity, and refineries are not necessarily prioritizing jet fuel amongst their product mix. So the crack spread, we think, will be 24% this year. That compares to 20% in normal times and 10% in 2021. So it's, of course, a big issue for our industry, and I think will be probably for years to come, even if we think that the oil price will progressively decline. And there are all kinds of other costs, of course, that are problematic. Infrastructure. We know that Bangladesh airport has been closed for 3 days because of flooding. Labor, interest rates we've mentioned, and other issues as well. Insurance, for instance, given the situation in Russia. Insurance is not a huge part of overall costs, but it's an issue that could indeed make the difference between a profit and a loss going forward. So every cost item is crucial for us all being able to realize a profit as of next year. Sorry. Right. But in spite of all of these headwinds, there's a lot of confidence. We see confidence within our industry here in the form of airlines taking more and more deliveries of aircraft, of course supported by the improved financial situation, and we hope and believe that this is a trend that will continue. We see confidence also amongst people wanting to come into our industry. This is entrepreneurship that in 2021 was stronger than in 2019 on all counts. More new firms created, fewer ones disappearing, and fewer still going dormant than in 2019. That's a very good sign of confidence and the attractiveness of our industry. The more broad investor community too is reasonably confident. We can see that at least we are quite significantly up from the lows that were posted earlier this year. So, turbulent times indeed. We have suggested many of the headwinds that we all face, and mentioned some of the tailwinds as well, of course, notably the strong desire to travel. But I would just like to say something about the possibility of energy abundance. This is something that would, of course, hinge on us being able to store renewable energy for longer periods of time, transport renewable energy over greater distances, and indeed, I would say that this is the single most important systemic solution that we could possibly provide to the systemic crisis that we face today. Now, you might all say, that's impossible, it's never going to happen. And I would just like to use an example that a dear colleague of mine said recently, which is salt. Salt was a economic power commodity for millennia. And today, salt is abundant, accessible to all, cheap, and arguably sustainable. This is what we need for a more profitable future, not only for our industry, but for the world as a whole. So, this is our industry. We are resilient, we are agile, we are recovering, and we are bold in the face of adversity. In the words of Christina Aguilera from last night, I would say, love yourselves. You've earned it.